small and
How
medium
much of
base.
that are you doing already in your current core areas, and how replicable you think it's going to be?
Our retail and SME portfolio is just either half or slightly more than half of the bank's book. So I think we already have an excellent advantage to replicate. What we really focused over the last 3 to 4 years during times of turmoil was to build capacity to increase the risk scoring sheets, the ring fencing credit risk issues, building up the network, hiring staff in these areas with the right attitude and mindset to engage the SME, so that during good times we will not be wasting time to build up capacity, but to unleash that capacity to actually get business.
In the context of the South Asian hemisphere, the whole region, the resurgence of India and the interest of the global investment community in India, and the boldness of India to want to liberalize further a number of its financial sector restrictions, is that going to be a zero-sum game? Is that going to be at the expense of Sri Lanka, at the expense of Mauritius? Are there advantages that you think you have currently that may be missed out for anybody who's interested in the Indian subcontinent?
Our reading of the Indian financial services regulatory framework currently is that it's still closed, very much a closed game, one of the last bastions. Within that framework, we have been challenging that and looking at ways of exploiting opportunities. Two areas which are worthy of notice in the investment banking stroke corporate finance field. We have tied up strategic alliances with South-based banks who one or two banks who don't have that expertise but have an interesting enough mid-market client base who could benefit from the expertise our joint venture brings to them. That's one area to get in. The second area which we have harnessed, I think we have started the process, and that's a significant investment for the next 10-15 years, is to track the inward remittances. India, even though it doesn't depend to that extent like Sri Lanka on inward remittances for its balancing its trade books, in terms of absolute numbers, the inward remittance is huge. It's probably close to $30 billion a year. And our mobilization efforts in the Middle East and other key corridors to Sri Lanka is now being used to leverage a pan-Asian business model, not just to Sri Lanka, starting from Philippines up to India, Pakistan, Bangladesh. We use the same infrastructure in Abu Dhabi or Canada or in Oman.
What is that infrastructure? I mean,
that is the setting up of owned and managed exchange houses, where we bring in the brand, we bring in the expertise, we tie up with key local partners in various 10 countries. But given that Sri Lanka is a very small market, we don't only confine the business model like our competitors to Sri Lanka. We leverage that infrastructure for an entire pan-Asian proposition.
So are you saying that the Hatton brand name is known in Pakistan, in India?
Very much so, but the way we do it, Emmanuel, is we use the distribution of domestic banks
in those
to
countries?
partner. For example, 3 weeks ago I signed a partnership with one of South India's 2 largest remittance players, the South Indian Bank, which has something like 620 branches in all states. So when I mobilize money, whether it is from Canada, Oman, Abu Dhabi, Dubai, Sharjah, I have a ready distribution network in excess of 600 payouts.
Right.
In India.
Let me go back one step on that point about the remittance business. What is your sense of the critical success factor to succeed in a remittance business today? And especially given the fact that what you seem to be doing is replicating channels that already exist in many different forms.
It's a partial replication, but with a clear differentiation. The Western Union and the other cash paying out propositions are certainly a low-cost, quick solution, but they involve paying out cash to the beneficiary. So cash goes out of the banking system and it leads to consumption. What we do, wherever possible, is to pay out into a current account or a savings account, and we cross-sell the remitter along with the beneficiary with a whole range of microfinance, PFS solutions, so that the beneficiary hardly takes the money out of the bank.
So that would mean that you're working at the value add part of the segment.
Absolutely.
Which means that the origination front, which today is highly commoditized, doesn't it make sense to work as a partner with other existing providers in that?
That already is happening. So we have a multidimensional approach where in some countries or some corridors we work exclusively with the commoditized suppliers, and in some we work both. Alongside with them, we also have our own proposition. The reason behind that is because where there is a large concentration of Asian expatriates or Sri Lankans, it's always a question of the intimacy. You may have, with all due respect, a B or C channel who is cheap and cheerful and fast, but they may not have the intimacy which is demanded by the expatriate,
right.
And that is what we offer.
How important is the remittance business to your own balance sheet? Is it a balance sheet business? Is it an off-balance sheet business?
It's a fee-based business, and which
it's a percentage of your total?
It's increasing. Today, I would say it accounts to about 15 to 20% of our fee-based business, increasing year by year. The country itself is seeing a growth of anything between 12 to 15% per annum in terms of the remittance business growing. Our share is anything between 25 to 28%, which we have defended in the past 4 to 5 years as the second most significant player in the market. From a country's perspective, last year it accounted for almost 60% of the trade deficit was funded by remittances. So it shows the importance to the economy.
Right. So what is the repository side of the equation? Meaning, what are the remittances being used to in order to create for asset creation, for example, in Sri Lanka?
A part of it is converted into rupees and kept in deposits, which is used to fund the loan book, the domestic loan book. But we also do a fair amount of infrastructure funding, not only in Sri Lanka, but in countries like Maldives, Mauritius, Seychelles, in areas like Leisure, etc. And we, because of this advantage, hardly ever use counterparty bank lines. And this has really made HNB resilient in the last 5 years during times of trauma, where the country's rating and the credit was in question. We had an alternate source which made us resilient and to be able to show the results.
Going back to the question of the future, there is a prospect of the northern part of Sri Lanka. There's a prospect of extending your remittance business regionally. What are you afraid of? What would be an X factor that you think can stymie this seemingly promising future that you're working towards?
Two things. First, from a country's dream to achieve that 6.5 or 7% GDP growth, two things are important. One is the assumption on stabilization of global oil prices, which is very important. And secondly, the ability to sustain industrial exports, which again is heavily dependent on the West. So I think those two equations, that will be a critical factor in the next few years. Very importantly, complementing that is the government's positive attitude towards consolidation and creating a framework for people like us who have the appetite to get into fewer but bigger banks who could have stronger balance sheets and not just face and support the growth in Sri Lanka, but to also face the challenge regionally.
Mr. Theagarajan, thank you so much for spending time with us.
Pleasure.